In December 2025, Australia's Department of Home Affairs released migration data that went largely unreported in mainstream media. For the first time in over a decade, American citizens became the fastest-growing segment of skilled migration applicants to Australia. Not British, not Indian, American. The numbers are still modest in absolute terms, but the velocity of the shift is what matters. Something has changed. This isn't a story about lifestyle choices or beaches. This is about capital flight, professional mobility, and what happens when confidence in a nation's trajectory begins to fracture quietly at the edges. When doctors, engineers, and finance professionals start looking elsewhere, it tells you something about perceived stability. It affects Australia's property markets, particularly in Sydney and Melbourne. It changes the composition of our skilled workforce. And it raises a deeper question. What are they seeing that we might be missing? In this video, we'll examine three things. First, how we got here, the policy decisions and global shifts that created this opening. Second, what the numbers actually reveal about who's moving and why. And finally, what this means for Australia's economic and strategic position going into 2026 and beyond. Let's begin. To understand today's situation, we need to briefly go back to 2016. That was the year two assumptions began to unravel in American political life. The first assumption was that globalization would continue to deepen predictably. The second was that domestic political institutions would remain broadly stable and trusted. Both proved fragile. Between 2016 and 2024, the United States experienced overlapping crises. Political polarization that ceased to be rhetorical and became structural. A pandemic that revealed deep weaknesses in public health infrastructure and social cohesion. Economic volatility driven by monetary tightening, supply chain disruptions, and rising inequality. And most recently, concerns about democratic norms and judicial independence that were once theoretical became front-page reality. Australia, by contrast, maintained relative stability. Our political disagreements remained contained within functional institutions. Our healthcare system, while strained, remained universal and accessible. Our superannuation system continued to deliver compounding returns for middle-class savers. And critically, our geographic isolation, once seen as a disadvantage, became a quiet strategic asset. What changed in 2025 was the volume. The American professional class, particularly those aged 35 to 55, began researching exit strategies not as a hypothetical, but as a contingency. Australia appeared on more shortlists than ever before, not because we became suddenly more attractive, but because alternatives became less certain. Let me show you what's actually happening beneath the surface. In fiscal year 2024 to 2025, skilled migration applications from the United States to Australia increased by 34% year-on-year. That's the largest single-year increase from any developed English-speaking country in over 15 years. I want you to look closely at this breakdown. The largest occupational categories are software engineers and IT professionals, up 41%. Medical specialists, particularly anesthesiologists and radiologists, up 29%. Financial advisors and portfolio managers, up 38%. What's unusual here is the wealth profile. These aren't young backpackers or entry-level workers. The median age of American applicants is 42. The median declared assets exceed $1.2 million. 63% hold postgraduate degrees. This is the part most headlines miss. This cohort brings capital, expertise, and networks. They're not displacing local workers, they're supplementing sectors where Australia has chronic shortages. They're buying property in the $1.5 to $3 million range, primarily in established suburbs with good schools. And they're doing it quietly, without fanfare. Now contrast this with broader American emigration trends. Total U.S. citizens living abroad increased by approximately 9% between 2020 and 2025. But the destinations have shifted. Portugal and Spain saw early surges driven by retirees and remote workers. Those flows have plateaued. Australia's surge is different. It's driven by families and established professionals, not digital nomads. It's permanent residency applications, not temporary visas. And it's accelerating, not stabilizing. The Australian Treasury estimates that if this trend continues for 3 years, it could add between $8 and $12 billion to residential property markets in capital cities. That's not speculation. That's their modeling based on current velocity. Superannuation inflows from skilled migrants could increase by 600 million annually. These are material numbers. Let's think through the strategic implications in stages. First order effect. Australia gains human capital without the cost of education. We didn't pay for their medical school or engineering degree. We get the output at peak productivity. That's a net benefit to GDP per capita and fiscal sustainability. Second order effect. This migration flow tightens housing markets in desirable suburbs. Locals competing for the same properties face higher prices. That creates political pressure, particularly among younger Australians already locked out of home ownership. The government will face calls to tighten migration settings, even for skilled workers. Third order effect. If the United States continues to lose professionals at this rate, there will be pressure from Washington to retain talent. That could mean tax incentives, healthcare reforms, or policy shifts designed to reverse the flow. If those reforms succeed, Australia's migration advantage narrows. If they fail, the flow accelerates, and we face capacity constraints in infrastructure, schooling, and services. Now consider the geopolitical dimension. The United States remains Australia's most important security ally. Our entire defense posture is built on the assumption of American commitment to the Indo-Pacific. What happens when American professionals, the tax base that funds defense budgets, start questioning whether their future lies in the United States? Capital follows talent. Talent follows certainty. If certainty erodes in the United States, Australia benefits economically in the short term. But we also face a question we've avoided for decades. Can we sustain our security model if American domestic cohesion weakens? This is not hypothetical. Defense analysts in Canberra are quietly wargaming scenarios where American political dysfunction limits military readiness or allied reliability. The migration data is one more data point in that larger conversation. There's also a cultural consequence. Australia has historically absorbed migration waves without destabilizing its social fabric. But those waves were diverse and distributed. A sudden influx of high-wealth Americans, concentrated in specific suburbs, creates visible stratification. That generates resentment, particularly if local wages don't keep pace with housing inflation. The risk is not economic. The risk is social. If Australians begin to perceive that migration policy serves wealthy foreigners at the expense of local opportunity, political support for immigration, historically bipartisan, starts to fracture. That would be a strategic loss far greater than any short-term economic gain. So where does this leave us? Australia is benefiting from American uncertainty. We are attracting capital and talent without having to compete aggressively for it. That's an advantageous position, but it's also fragile. Our migration settings were designed for a world where Australia had to compete for skilled workers. We may now face the opposite problem. Managing demand without creating domestic backlash. That requires policy sophistication we haven't historically demonstrated. The property market impact is already being felt. Auction clearance rates in inner-city Melbourne and Sydney are running above trend, driven partly by this cohort. If you're a local first-home buyer, you're now competing with someone who can settle in cash. That's a structural shift, not a temporary fluctuation. From a strategic perspective, we need to ask a harder question. Is this migration trend a sign of Australian strength or American weakness? If it's the latter, we are benefiting from a partner's decline. That's not a stable foundation for long-term planning. So when you step back, 3 truths emerge. First, Australia is experiencing a quiet but significant shift in skilled migration composition, driven by American professionals seeking stability their own country no longer guarantees. Second, This brings short-term economic benefits, capital inflows, skills augmentation, fiscal contributions, but also medium-term risks around housing affordability, social cohesion, and migration policy sustainability. Third, the underlying driver is not Australian policy success, but American institutional uncertainty. That makes this trend contingent, not structural. If the United States stabilizes, the flow reverses. If it doesn't, Australia faces choices we've deferred for decades about migration scale, infrastructure capacity, and strategic independence. Here's the question I'll leave you with. Does this migration surge strengthen Australia's position, or does it expose how dependent we remain on the stability of larger powers? If this concerns you, I strongly recommend watching my analysis on Australia's housing market and migration policy settings, where we examine the structural pressures beneath these trends in greater detail.